Yo, what's up, y'all? So, I want to go over these two trades that I took today on S&P 500 and US oil. They both ended in a loss for the day. And typically, what I like to do, I only like to give myself at least two losses in the day. That give myself some mental clarity, go back to the drawing board, see if I could have did anything better. Or sometimes in most scenarios, the trade will just go against you. So this is on S&P 500 today. This one was a late addition to the watch list. So looking for longs today. We're above this month's high as we break above it earlier in the week. So down to the 15 minute. So coming into the New York open or the pre-market open, we break London's high. I'm going to close this. We break above London session's high and we retrace back down to the anchor VWAP set at the beginning of the day. So at this point, if you guys have been following me long enough, I'm going down to the 1 minute. I'm looking for 1 minute divergence. At this point was here. Price action was making lows and on the sides making higher lows. We get an area of consolidation and this is where I would have entered. And at the low of this consolidation area is where I put my stop loss. So this is just to kind of this down a little bit more. So we're trading, right? Overall, the bias or my thinking, right, is that we could potentially trade longs. The breaks of structure at this London high is an added probability into saying that price action could go higher. Now, the point to where price action retraces lower to the 1 minute, like I said, is where things, I won't say become dicey, but is where you have to like in on your strategy. And for me, I single into my strategy. I've been profitable thus far using it. So what beginner traders would typically do during this point is that they'll just start revenge trading because they take a loss. I'm doing this for about 3, 4, I think about going on 5 years now. At this point, I don't do revenge trading anymore. I have a set limit that I'll give myself to trade at max 2 trades, but that's only if I take a loss. So since S&P 500 was a new addition and getting into the oil trade was still on my original watch list, that's what keeps me thoroughly engaged into the market, still looking for entries if I were to get into a second entry. So this is a prime case just to show you that just because you have or think you have all the probabilities set in your favor, no one truly knows where price action could go. So that's why you create a strategy, or how I created my strategy. I back test it. I get the data, whether or not you know winnable trades. You know, how many trades do I typically take? How many losses do I typically take in a row? Or how many losses do I want to myself to, just so that I can keep capital. I can just go into the next day fresh, maybe get a win tomorrow, or if I take a loss tomorrow, it is what it is. So going just to circle back, you can have all the probabilities in your favor or think you do, but the market doesn't really care about my anchor VWAPs or my breaks of structure or any of these other things that I'm telling you. I use these things because they give me mental clarity when I'm looking at the market. So as I'm stacking confluences or added probabilities, they help me make a more estimated guess to where price action could go. So just a loss. Come back tomorrow. So now on US oil. So I was trading this counter trend, meaning that on the daily time frame, price action was looking for longs originally, but at the beginning of the New York session, we were still under this previous month's price action was below it, or it looked like it was rejecting from it. So therefore, my thought process was we can trade this counter trend towards my overall bias. So we get a bearish breaker structure at the Asian range low. We break that one. Let me close this. And price action retraces to the anchor VWAP that I have set for the day. And at this point is the point of where I'll start looking for active short ideas. But like I said before, it just goes to show that price action can always move against you at any point in time. I actually went in profit a decent amount, but because I have discipline and I know that within my own strategy, I'm not just going to start taking money just because I see it's on the table. But that comes with experience and time. So just because I went in profit a little bit and then immediately got stopped out, I don't see it as a win, but I lost on the trade, but I won in my psychology. So I'm gonna go further in depth about trading psychology in a different video, but I'm not revenge trading. I'm not looking on ways to get this money back. I made two losses for the day, so I'm done. That's my rule. Sticking to your rules, trying to do this long term will either make or break you as a full-time trader. Because like I've said in previous videos, the is yes, we want to make money, but then how can we make money sustainably over a period of time? And the only way that you can sustainably make money over a period of time is having rules and sticking to those rules. So for me, if even if I get another entry, I'm just going to mark it up, add it to my statistics, build the statistics for you guys a little bit more, and call it a day. I'm going to walk away from these charts and go do something else. I'll probably go eat or something. But that's the main idea. You can have all your probabilities, own estimated guess on what you think price act could do. But at the end of the day, you're at the mercy to the markets. The only thing that'll keep you mentally sound, not having anxiety or even having anxiety going through all these trades, is just to have your rules. So that's it, man.